Hello, and welcome back to Explain the Charts. Today, September 15th, 2024, we're taking a look at the XAUUSD pair, also known as gold. Recent news regarding inflation, interest rates, and geopolitical tensions suggest that gold could be in for a volatile ride. The U.S. Federal Reserve's dovish stance on interest rates, with expectations of a rate cut in September, has weakened the U.S. dollar. A weaker dollar typically benefits gold, as it makes the metal cheaper for buyers holding other currencies. The recent inflation data in the U.S., particularly the June Consumer Price Index, has also been a contributing factor to gold's bullish run. With inflation showing signs of cooling, the Fed is likely to prioritize stimulating economic growth over controlling inflation. However, the ongoing geopolitical tensions, particularly the recent conflict in the Middle East, have also been a catalyst for gold's safe haven appeal. Investors seeking shelter from market uncertainty often flock to gold, boosting its demand and price. Now, let's switch gears and delve into the technical analysis of the charts. Starting with the daily chart, we can see that gold has been on a strong upward trend in recent months. The price has broken out of a long-term consolidation pattern, suggesting a bullish breakout. We can also see that gold has retested its previous all-time high, demonstrating strong bullish momentum. The Relative Strength Index, RSI, is currently in overbought territory, suggesting that a pullback might be in the cards. However, the RSI is still above the 50 level, indicating that the overall trend remains bullish. The 21-day Simple Moving Average, SMA, has recently crossed above the 50-day SMA, confirming a bullish crossover. This signals that the longer-term trend is in favor of the bulls. The current price level around $2,570 is a key resistance level to watch. A break above this level could open the door for gold to continue its rally to new highs. On the downside, support levels are visible around $2,550 and $2,531. A break below these levels could indicate a short-term correction or a change in trend. However, it's important to note that the overall trend on the daily chart remains bullish. Moving on to the 1-hour chart, we can see a more short-term perspective of gold's price action. The price has been consolidating in a range for the past few hours, suggesting a period of indecision. The RSI is slightly above the 50 level, indicating that the bulls are in control, but the momentum is fading. The 21-day SMA is providing support, while the 50-day SMA is offering resistance. The current price level is near the midpoint of the consolidation range. A breakout above the upper end of the range could trigger a short-term bullish rally. Conversely, a break below the lower end of the range could indicate a short-term bearish correction. Let's take a closer look at the 15-minute chart to get a granular view of the recent price action. The 15-minute chart shows a more volatile picture of gold's price action. The price has been bouncing between support and resistance levels. The RSI is currently below the 50 level, indicating that the momentum is shifting in favor of the bears. The current price level is near a support level. A break below this level could trigger a short-term bearish correction. However, a bounce off this level could lead to a short-term bullish rally. The recent price action suggests that gold is likely to remain range-bound in the short term. Traders should be cautious and wait for a clear break of the range before taking a position. In conclusion, gold is currently facing a number of bullish factors, including a weaker U.S. dollar, dovish Fed expectations, and geopolitical uncertainty. However, the RSI on the daily chart and the recent price action on the 15-minute chart suggest that a pullback might be in the cards. The key price levels to watch are $2,570 resistance, $2,550, and $2,531 support on the daily chart. A break above $2,570 could signal a continuation of the bullish trend, while a break below $2,531 could indicate a correction or a change in trend. On the 1-hour chart, traders should be aware of the consolidation range. A breakout above the upper end of the range could trigger a short-term bullish rally, while a break below the lower end could indicate a short-term bearish correction. Overall, gold is likely to remain volatile in the short term as the market digests the latest news and events. Traders should be cautious and wait for a clear break of the ranges on the daily and 1-hour charts before taking a position.